Stop looking at inflation. Stop looking at the Federal Reserve. Stop looking at the White House. You are watching the wrong movie. While everyone is distracted by political headlines, the real assassin is lurking in Tokyo. Right now, the global financial system is facing a terrifying event. The mainstream media calls it a correction. Politicians are calling it a soft landing. But if you look at the cold, hard math, there is only one name for what is happening: a global margin call. Think about this. The world's biggest creditor has run out of money, and now they are calling in their loans. This isn't just a recession. This is a liquidation event. A trap has snapped shut on the American economy, and there is no exit door. In the next 10 minutes, I am going to show you the numbers that Wall Street is terrified of. I will expose the silent assassin that is draining liquidity from your pockets right now. And finally, I will reveal the 3 dark scenarios of how this game ends and why the darkest scenario might be exactly what the central bankers want. To understand this trap, you first have to understand the bait. For the last 40 years, the global economy has been fueled by a very specific, very strange financial arrangement. Think of it as a 30-year free buffet for America. Here is how it worked. Japan, suffering from its own economic stagnation, kept its interest rates at 0%. They printed yen, and they used that yen to buy American debt. For decades, Japan has been America's financial anchor. They bought more U.S. Treasury debt than any other country in the world. At its peak, Japan held over $1.2 trillion in U.S. bonds. Do you understand what that really means? It means Japanese grandmothers were effectively subsidizing your mortgage. They were subsidizing the U.S. government's reckless spending habits. They kept American credit rates artificially low for an entire generation. But that era is over. The math simply does not work anymore. Japan is now drowning. Their debt to GDP ratio has exploded to 235%. Their population is aging and shrinking, meaning they need to pull their savings back home to pay for pensions and healthcare. They don't have the surplus capital to fund America's lifestyle anymore. The flow of money has officially reversed. In the third quarter alone, Japanese investors sold nearly $62 billion in U.S. treasuries. This is not diversification. This is an exit. This is a structural retreat. The anchor is gone, and without it, the American ship is drifting straight into a storm. So, why does this matter to you? Why should you care if Tokyo sells some bonds? Because of a mechanism called the yen carry trade. This is the heartbeat of Wall Street. It is the global financial machine built on borrowing cheap yen to buy higher-yielding assets like U.S. tech stocks, real estate, and crypto. When the yen is stable and cheap, this machine prints money. It pumps liquidity into the U.S. markets. But when Japan loses control, which is happening right now, the machine reverses. Analysts at major banks have warned this shift could trigger a global market Armageddon. Here is the mechanics of the crash. Japan is forcing a rate hike to save their dying currency. When rates in Japan go up, the carry trade becomes unprofitable. Trillions of dollars in loans get margin called. Investors are forced to sell their U.S. assets immediately to pay back their yen loans. Liquidity evaporates instantly. You are already feeling the shockwaves, even if you don't realize it. Look at U.S. mortgage rates. They jumped from 2.6% during the pandemic to hovering near 7%. Look at credit card interest rates hitting record highs. Why is this happening? Because as Japanese investors step back, there is no one left to buy America's debt at low rates. This creates a $500 billion blood clot in the financial
This medical
system.
visualization
If
shows
Japan
a sudden
pulls the plug
liquidity
completely,
crisis. where the
The
flow
US bond
ceases
market
and forms a
freezes.
dangerous clot.
And when the bond market freezes, the entire global economy suffers a stroke. Before I reveal the 3 dark scenarios that await us, do me a favor. If you want the truth that the mainstream media hides, hit the like button right now. It helps the algorithm share this warning with more people. Done? Okay, let's open the doors. Now, let's go deeper. This is the part the news won't tell you. The central bankers in the Federal Reserve and the Bank of Japan are not stupid. They see the exact same math we do. They know the system is insolvent. So, how does this game end? I have analyzed the data, and I see only 3 possible scenarios. 3 doors. And behind every door, there is pain. Scenario number 1. The controlled burn, also known as the boiling frog. In this scenario, the US and Japan make a secret backroom deal. The Fed agrees to print trillions of dollars to quietly buy the bonds that Japan is selling. They replace Japanese capital with fake printed capital. The result? They prevent a sudden market crash, but they ignite permanent, sticky inflation. The price of your groceries, your gas, and your rent will double, and then double again. This is the soft landing they promise, a soft landing where you slowly starve to death while the stock market goes up in nominal terms. Scenario number 2. The uncontrolled crash. The Armageddon. This is what happens if Japan loses control. The Bank of Japan is forced to hike rates aggressively to stop the yen from becoming worthless paper. The carry trade unwinds instantly. Trillions of dollars rush out of US markets overnight. US Treasury yields could spike to 8%, maybe 10%. At 8% yields, the US government cannot afford the interest on its own debt. The housing market doesn't just cool down. It freezes solid. Major banks would face insolvency. This is the margin call scenario. It is brutal, it is fast, and it wipes out 50% of the stock market in months. But then, there is scenario number 3, the darkest scenario, the Great Reset. You have to ask yourself, why would they let the system get this bad? Unless the collapse is the goal. Think about it. The US debt is mathematically unpayable. Japan's debt is unpayable. The current fiat currency system has reached its mathematical limit. You cannot fix a system that is broken by design. You can only replace it. In this scenario, the Japan crisis is allowed to happen. It becomes the perfect scapegoat. When the crash comes, they won't blame their own money printing. They will blame global instability. They will blame the speculators. And in the middle of the chaos, when people are begging for safety, they will introduce the solution. The old system failed, they will say. Here is the new system. Central bank digital currencies, CBDCs. Programmable money, a total reset of the debt ledger, in exchange for your financial privacy. They don't want to save the yen. They don't want to save the dollar. They want to transition out of them entirely. This margin call isn't an accident. It's a demolition. So, which scenario will it be? Whether it's the slow burn of inflation or the violent crash of a margin call, the outcome for the average person is the same. The era of easy money is over. The free buffet is closed. And now, the bill has arrived. If you are holding cash, you are holding a melting ice cube. If you are holding variable rate debt, you are walking into a minefield. Analysts at major firms like BlackRock are already advising a shift into real assets, gold, commodities, and alternative strategies. Things that cannot be printed by a central bank. The trap has already snapped shut. The only choice you have left is, are you going to be the one paying the bill? I am currently moving my own portfolio into 3 specific assets that historically survived these crashes. I will reveal exactly what they are in my next video. So, make sure you subscribe and click the bell icon right now so you don't miss the exit strategy. And tell me in the comments below, which scenario do you think will happen? Number 1, 2, or 3? Let me know your prediction. Don't be a victim of the narrative. Watch the math. Thanks for watching.